overnight or recently, the White House economic advisor, Kevin Hassett, came out and said, look, we expect April to have all the tariffs issues resolved. And I think there is a pain threshold that these guys are not willing to go over. We expected the first couple of months of this presidency to be very volatile. That's exactly what we're getting. I still think you've got to be very careful reading too much into it, but expect this to continue. And look, we're still looking at it as a buying opportunity, but being very selective. But there is obviously going to be a fair bit of fear in the market. And so in that case, be careful what you buy, and beta may not be the approach.
Do you get the sense that Donald Trump is actually trying to engineer a slowdown in the US, hence obviously to the point perhaps of recession?
Yeah.
And you only have to look, I guess, at energy prices. He wants to pull those right back. They are falling. That's what he wants.
Exactly. And look, so he's even in an interview I was listening to, he wants lower energy prices. What do lower energy prices do? They feed into inflation expectations. And if there's a chart that you can show, the 5-year inflation expectations, break-evens in the US have been rising steadily, and on the back of tariff issues, right? So that's the white line. They've been rising. Look at it. It's at a pretty much at the upper range of its trading range since 2022. If you get that down, one of the key drivers of that is oil prices, which is the blue line, right? So if you get oil prices down, inflation expectations will start to come down. What that will allow, I guess, the US Fed to do is basically start to potentially cut rates. Remember, last year we were expecting several rate cuts in the US, then those expectations were fully pulled back. And now, with this recent market volatility, and obviously the US Fed is in a blackout period right now, I think Trump in so many ways is trying to engineer or force US Fed's way. What's very interesting, he wants lower energy prices and he wants the Fed to start cutting rates, but he won't give you a straight answer whether his tariffs are inflationary or not. So I think that's his play, and he wants to take the pain, and everyone knows this, he wants to take the pain well up in front before the midterm elections, which is November next year.
Yeah, because he and his economics team are talking about a reset for the US economy. I mean, is that credible?
Yeah, look, it's hard. And any sort of reset is going to be difficult. You need to have, I guess, a real strong motivation and discipline behind it, because markets, as you know, have become very fickle over the last 5-6 years, and over the last 10 years. Every time something's happened, you've got the Fed put, you've got the fiscal policies. Remember how much Biden spent. So look, if Trump is really if he's really serious about efficiency gains on immigration, on tariffs, he's going to have to really stick his ground. And that's where the markets are going to try to force his hand. But I think he will have a pain threshold in mind. And I think he's got a time period. I genuinely believe the first 6 months of this calendar year, he wants to see it all play out. After that, he wants the markets higher. Because, like I said, he does not want to lose control of the House and the Senate at the midterms.
Well, as we started at the beginning there, that pain very much been felt on equity markets at the moment.
100%.
None so more than what we're seeing with tech stocks, the NASDAQ, very much in correction territory at the moment. How are you viewing what we're seeing in that space? Does it potentially present a buying opportunity? Yeah,
look, if you look at the valuation of the NASDAQ, last 2 to 3 years, this is the forward PE ratio for the tech stocks and the S&P 500. At current forward PE multiples, that typically tend to find a floor. Now, all else being equal, earnings revisions haven't happened. I have noticed some of the economists overnight have started to pull. I think Goldman Sachs has started to pull the economic forecast for the US lower. I still expect economic growth, but much more moderated. Now, if that starts to feed into earnings revision, obviously, these support lines won't really hold up. But it'll be very interesting to see if all else being equal, the great saying in finance, you might see if we see bottom feeders start to come in and buy tech stock, because they're still delivering very attractive cash flows and earnings growth. So this is an important, I guess, support level that we're watching for. And we'll see how it all plays out. But tech does look like, and don't forget, tech was absolutely on a tear for the last couple of years. It's down, I think the NASDAQ is down 11.4% over the last month. There's a bit of profit taking going on as well.
Now, that's what's playing out in the US at the moment, how it's affecting global markets. All of this coming back to that issue of tariffs. In particular, what we're seeing with Trump obviously hitting Mexico, Canada, and China as well. What are you seeing in China at the moment?
Yeah, look, at the start of this year, Andrew, we said to our clients, we thought the relationship with China and the US will improve. I just feel like Trump likes strong global leaders. And one of the, one of our key overweight positions for this year, in fact, position that we've held all through last year as well, is China equities, both in our multi-asset strategy through China New, and then obviously in our global strategy through Tencent and Baba. And look, over the last 6 months, Baba's up 71%, Tencent's up 46%, given off a low, but that's why they were in there. The valuations were looking so oversold. Now, we still think China has a fair bit of room to run. Over just in Monday, mainland Chinese investors bought like $3.3 billion, the highest that they bought in a single day since 2022. So I think Chinese government have turned their strategy on entrepreneurs and local tech stock, which was quite different to what they were trying to do over the past 5 years. And we think given the valuation discrepancies between Chinese tech stocks and global tech stocks, more specifically US, I think there's a little bit more room to run. And I think US is trying to organize a summit with President Xi and obviously Donald Trump. And I think the overwhelming sentiment from there would be, let's just work together to settle things.
And Zach, a quick look at the Australian market. Obviously, we're falling in tandem as well, perhaps not as exaggerated though as what we're seeing on Wall Street. Are you seeing opportunity here?
Yeah, absolutely. We're looking at opportunities in Australia, but the kind of opportunities we're looking in Australia are not price takers. Not big companies with big capex profiles, manufacturing sites, big supply chains, etc., etc. What we're looking for are companies that are, very nimble, companies that are winning market share, they're innovating. And one that comes to mind that we actually upgraded this morning, WiseTech. Obviously, WiseTech has been badly derated over the last couple of months because of obviously what's been happening at the board level. We're not going to shy away from that. So the ESG governance issue is going to probably test your viewers' ESG compass. But at the end of the day, fundamentally, WiseTech is actually performing very well. The product delays will eventually come through, and that really plays into forward earnings, confidence around forward earnings over the next multiple years. So WiseTech does look very interesting to us at current valuation.